Awesome. All right. Well, good morning, everyone. Thank you for joining us for Financial Friday on this start to the holiday weekend. I hope everybody's got some big plans and doing something either fun and productive or even completely lazy with your holiday weekend. The weather is gorgeous out there right now. I just got out of the kids had a track and field day this morning, first time in a few years. So got out there and saw the sunshine. I'm super excited to get back in the yard and do the things. But what we're talking about today for Financial Friday is around fixed assets. And for agents, that can mean a few different things in regards to the assets that you might have for your business. And we're going to talk a little bit about that as we go through this presentation. But as always, feel free to unmute and reach out, ask a question if there's something. Otherwise, I'm happy to have a one-on-one conversation with anybody in regards to something you don't want to talk about on the call. I don't really catch things being in the chat, so feel free to chime in any other way. Or reach out in Slack. That works for me too. So with this piece, I first wanted to talk about getting to the assets, what a lot of people are familiar with most of the time, and with the day-to-day of doing business is the stuff that shows up on a profit and loss statement or a P&L, and that is the income that you receive and your expenses, what it costs you to do business and get that income, right? So we have the commissions income, you might have some mentor income, referral income, you might do some showings for somebody and get pieces of that. You might have contest winnings. Those would be recorded as a different income category. But both of these things are different than what's going to show up on your balance sheet. And the balance sheet is going to specifically show your assets, things that you own, things that you can sell for money and are an asset to your business, versus the liabilities, money that is promised to others. And that is credit card balances, or a mortgage is a liability. The balance of that mortgage is the liability. The payment to it is the expense, and then that moves over to the asset side as equity. So you've got some other details that are moving around throughout your books, things on the balance sheet, things that move forward. But for a lot of agents, if you have assets, you're going to depreciate some of those things probably once a year. If you're doing things more often with your CPA or with your tax person, you might be doing it quarterly, but more often than not, you're looking at these details once a year. What's that tax strategy kind of falling around it? But for a lot of people that are agents, you personally own your vehicle, and then you write off a portion of that for miles, for all of the expenses that go along with it. And sometimes it's mile for mile, or it's just a standard deduction with that piece. What you might want to think about is not only what can be depreciated over time, but what's that dollar amount that we should be looking at for having it expensed all in 1 year, right? Pay for it outright, or stretch it out over time. And these are numbers that I usually use when it's a solo agent endeavor. $500 for the cost of the asset is kind of that key differentiator for me. Less than it, expense the whole thing. Even if the value of that item is going to last longer than a year, take the expense in the year that you purchased it. That benefits you there. But if you have something that's over $500, you buy a new laptop, you get a printer, you set up a dual monitor system, you buy video and sound equipment to do videos and do different things. Over that, talk to your CPA or your tax person about depreciating that asset over time and how they want to report it in your books. Some CPAs or tax professionals will use an outside fixed asset calendar or schedule is what they would call it. And they're going to do a journal entry that depreciates that more regularly. Oftentimes they'll do that for you as the bookkeeper. If that was my piece, they would typically tell me what that should be every month, and then we put that in your books. But one of the bigger ones for a lot of agents is, when do I get to the point where my business should own my vehicle, right? That is a huge asset to have on there. If there is another liability, that's another piece to talk about. But then everything in there is an expense for maintenance and upkeep. You've got the car washes, you've got gas, you've got all of those other pieces that really then take that turn of saving you on those taxes. Now, remember, the more you eat at that income and lower your tax burden, the lower your recorded income is as well. So if you want to, even in the next year or 2 years, is something to start thinking about, that you have to have, you want to record more of your income. And so some of these strategies are when you I just need to lower that tax burden, and then I'm going to grow, and then I'll figure out some of those other pieces around that later. But using that vehicle as a fixed asset that depreciates over time is a great tool, not only on the expenses side, like I mentioned with the maintenance, but having that as an asset for your business. Now, say you have a loan on your vehicle right now in your name, okay? Go to the same bank or provider and see what they could do for your business to transfer that over, and your business take ownership and responsibility of the loan. All right. Your business probably doesn't have the same type of credit history that you personally do. So could your interest rate be higher? Yes. But interest paid on something like an auto loan is an expense to your business. So now that interest is basically comes off of your income, where when you personally pay it, it doesn't. That's just the cost of life in that side. Okay. So there's pieces that go back and forth for it. If you want to talk more about how to build your business credit to where that's establishing its own credit, that's a whole nother Financial Friday. Happy to have that one again. But these are the conversations to have. Wherever you're banking now, or wherever your business banking account is, those are the people to talk to about getting that first loan in that business name. Okay, you're already paying it. You're already going to keep paying it. That interest might be a little bit higher because it's more of a risk under that entity, but you will probably get it from the same bank that you're already working with. If you need a different banker, let me know. I have some great contacts over at Bridgewater Bank, as well as some business banking relationships at Wells Fargo. But it doesn't matter where it is, because the piece around that is it's an auto loan. And you can get that at a number of different places, including different credit cards have auto loans now. I got quoted from Capital One not that long ago for refinancing money. So the pieces that you really want to think about is when to put these in place, what the strategy is, and what that's going to mean for tax time. We're coming up on the middle of the year, so it's a great time to sit down and assess where that tax burden is going to fall. You can kind of project where things are going to be out even in the next 2 months, so you can really see the trajectory of what your business is going to look like going into fall. Have a strategy around that. Review it again in September, and then be ready for December before it even happens. The piece that I would want to get you away from is going into tax season and then having 2023 transactions paying your tax burden that you have right now, if that makes sense. So some of the topics that we're going to discuss at future Financial Fridays are revolving around how to legally pay your kids' payroll tax-free. That's a huge topic, especially as your kids are coming into an age where they're able to work. They're able to do those things. You can contribute to their Roth IRA and start putting away for that, where they're helping you and getting that perk of it as well, which is an expense on your business. And also coming up, tax relief. Some people have gotten through tax time and they are hit with a pretty hefty tax burden that they weren't expecting. I would love to help get around that so that doesn't happen again next time. But sometimes that tax relief conversation is needed. There are some ones that cost a lot and are scammy. I want to help people avoid that if at all possible and talk to the right people about that tax relief. So those are Financial Fridays coming up. Otherwise, we're going to be starting kind of back from the top of the deck for Financial Fridays, since we've done about 6 months of these and have a lot of great information that we're going to recover in kind of a new eye coming into this busy season for everybody. So did anybody, Cheryl, I saw that your mic was off there for a second and then you put it back on. Did you have a question that you wanted to ask?
Yes, I do actually.
Yeah.
So it's regarding cars, loans versus leasing. What are your thoughts on that? Like putting it in my company name, because I'm going to be purchasing a car. Doesn't come to like next month or so, but I'm like contemplating, should I, purchase it or should I do it as a lease?
Yeah. So if you purchase it, you have something to sell on at the end of it. And it's going to be as a liability for the full amount of the loan on your business's books. But unless your business is trying to buy something else and get more loans, having that liability on there isn't going to hurt you. It's only going to be better to establish your credit over time. The lease option is you're not going to have that big liability on your books, but you're also not going to have an asset to sell on the other side, right? So it really depends on what that right model is for you. For a lot of agents, it's owning it, getting as many miles as you can out of the vehicle, keeping that maintenance up, and then selling it on the other side, just to be your down payment for the next one. But I would say the loan is something to look at and owning it, just to set up that business credit and get that rolling.
Okay. Gotcha. All right. Well, I think I just kind of wanted to know the difference between like with a lease, could I, is that considered an expense in a sense? Like that's what my monthly payments.
Your monthly payment on a lease, if your business has it, is an expense. Yep.
Okay. Yeah. Just wondering like how I would claim that. Otherwise it's just the interest if I buy it out, right?
Not just interest. The payment is an expense on there. So it's going to move the dollars from, being balanced on your liability into the equity or into the asset side of that on the balance sheet. But the interest is also an expense. So you get both sides of it when you own it as well.
Gotcha. Okay. That makes sense.
Yeah.
Perfect. Thank you.
Yeah, not a problem. That's a really easy journal entry for, in your books, because you don't want to just go from the bank feed and say, this is the dollars and you put that in. If you do it as a journal entry, it'll tie to what the payment was in the bank, but you'll get all of the details in your books at the same time instead of just the one cash value.
Gotcha. All right. Thank you.
You're welcome. Any other questions? Feel free to pop on.
I do have a real quick question. Sorry. Hi, I'm Crystal, by the way. I don't think I've gotten to formally meet you, but so both of our vehicles are paid off, and primarily I use we have an SUV and then we have a regular car. But like when I go do my traveling, I use the MileQ app
Mile
that I have on
IQ
my
app?
phone, and it just kind of auto does it. And then I just print a report, and that's kind of, is that the best way to go about it? Because I don't necessarily, we just paid cash for our one vehicle and the other one is paid off. So
Mhm.
is that, and then every check, I just take out a percentage and then we put it into a separate tax fund for the end of the year. Is that
Yeah,
good?
you're doing it right. That's a great idea. I love Mile
Okay.
IQ. It's the app that I
Okay.
recommend to everybody because it
Okay.
catches it right without you even thinking about
Yep.
it. If I had to write it down, I would miss so many miles. Like
Right.
I don't know who's that detail oriented anymore. It just doesn't happen. But I like for Mile IQ too, it doesn't matter what vehicle you're in. It catches the
Right.
miles wherever your phone is. So great job with that. Definitely keep those records. That is exactly what you need. Now, do you have a home office that you're using for tax time?
So my husband does them, and
Okay. So for
yeah, I
yours,
don't know.
the reason I bring it up is because if you have a home office that you're using on your taxes, the second you leave for work to go to the Apple Valley office or to Excelsior or to a showing or to a coffee meeting, that's when your business miles start. But if you aren't using a home office, it doesn't start until you get to the office and then start going around. So keep an eye on that piece and when you're categorizing it. But if
I categorize them, and
vehicles,
I can basically determine what, like, oh, just took my daughter to school, not that. Like I know them, and then it can auto do them too. But most of them I can tell where it is. So
yeah. And I love that feature too. This dropping off at school just automatically goes to personal.
Yeah.
And it's definitely worth the $60 a year, which is a business expense. So make sure you document that one as a software and programs expense. But with owning the two vehicles, it might be worth a conversation. I don't know how you're structured right now, but if your business is an LLC, even if it's taxed as a sole prop and not taxed as an S corp yet, you could sell one of those vehicles to your business, and then your business has that asset and the expense with that as well.
Okay.
Worth a conversation with your tax person.
Okay. Thank you.
You're welcome. Yeah. So if there aren't any other questions, that's all I have for the topic today. Everybody's situations are different and everybody's has little nuances. So it's always great to have a really good relationship with your CPA or with your tax preparer, or feel free to reach out to me. And if I don't have the answers, I'll at least help you get the right questions or the wording around the questions to help you get the most benefit out of the conversation. I know that, the billing for a CPA and for some of those other people can be quite high. So happy to help you really narrow in what that question should be to get you the best benefit for it. Otherwise, have a great weekend, you guys. 3-day weekend, super excited about it. The weather seems to look nice. I'm a garden fiend, so I'll be out in the yard getting sweaty and dirty and absolutely loving it. But take care, and we'll talk to you guys next week.
Thanks, Chrissy. Thank you.
Bye.
Bye.